I'm going to backtest the LCE model in real time and walk you through every single trade from start to finish. I'm not going to be cherry picking or giving perfect examples, just a full raw week of trading it exactly how I trade. So, what I'm looking for when I open my chart, what I'd take, what I'd avoid, how I'd manage my trade, and why. The purpose of this isn't just to show you the system, it's to show you how it plays out when you actually follow it. And this is the process that builds trust and allows you to actually stay consistent with one strategy and scale. So let's get into it. First, we need to lay out a couple of ground rules for our backtest. Our first rule is, of course, that every trade must be an LCE trade. I'll link a video here if you want to know exactly what that looks like. But the trade must be a level-to-level trade. Not a scalp, not a swing, and not anything outside of entering in one supply and demand level and exiting at the next one. Rule number 2, I only trade during regular market hours, 9:30 a.m. to 4 p.m. Eastern. And I'm usually done before noon since that's when a lot of the volume and movement happens. Rule number 3, I only take breakout trades. So I'm not looking for mean reversion or entries in the middle of a range. I'm just looking for clean breaks to new levels. And finally, rule number 4, risk is the same for every single trade. Regardless of my risk reward or how confident I feel about the trade, risk is always the same size. This is the secret ingredient because this is what makes it easy to track and easy to scale. Now I'm backtesting ES futures, and the most recent week at the time I'm recording this is January 12th to January 16th. And quick disclaimer before we start, this isn't financial advice. I'm just showing you what works for me. If you decide to use it, trade at your own risk and size properly. So let's get into it. All right, so this is before the market open on Monday on the 1 hour. And here we see that the 1 hour cloud is flat overall. We see that it's flipped multiple times and doesn't have a clear direction. We also see that market structure is generally choppy as well. We don't have a series of higher highs and higher lows, or lower highs and lower lows. We don't have an uptrend or a downtrend. The price is all over the place. This is very much a range. So in terms of our bias here, cloud direction and market structure are both clearly telling us that neither side has an advantage. There is no strong evidence that the price will move in either direction, and that means two things. First, the price can break to either side. So it's not like we're in an uptrend where the price is very unlikely to break under the cloud and move a level lower, or vice versa. The price has an equal chance of breaking either the upper or lower level by the looks of it. So we need to consider both possibilities equally and not focus on one side. And second, when we get a breakout, we need to make sure the price actually breaks out. Unlike an uptrend where you might be forgiven for entering a little early because the price is moving in that direction anyway. We don't have a bias here. When the price is in an uptrend, we should assume it keeps trending up until proven otherwise. When the price is in a downtrend, we should assume it keeps trending down until proven otherwise. When the price is in a range, like it is right now, we should assume the price keeps ranging, so we don't just want to treat any little move like it's a breakout. Because remember, the default is that the price fails to break and continues ranging. We need strong evidence that the breakout is actually happening. And in this case, that would mean instead of setting our alert near the middle of the level, we set it more towards the end of the level. It's a later entry, but it'll give us more certainty that the price will break out compared to if the price simply looked like it was going to break out, then quickly reversed. Now let's drop down to the 5-minute and see where we need to set our alerts. Our 9:30 candle will be opening at this middle level here. So when it comes to taking a breakout, we're either looking for a break of the upper level or a break of the lower level. And once again, since we don't want to get caught in the range, we'll place them more toward the end of the level. Now we simply wait for our alert to get triggered. And here we see that the price finally grinded its way up to the supply level and built tons of structure to support it, as well as a strong directional cloud. This tells us that bulls are in control, and we're more likely to continue breaking out than to reverse. So we enter long, with our stop under market structure and our target at the next demand level. Then we wait. So the price ended up moving higher and completing a level-to-level move. That's our one win for the day. Now we lock it in and we can move on to Tuesday. Now this is right before the market open. We can see that we had a fairly large spike, and this is because of a news event which happened at 8:30. We can see that the price quickly rejected this spike and collapsed lower, which leaves us with an interesting situation. Because on the 1 hour here we see that the cloud is bullish. The structure is a little awkward though because of this spike. So let's drop down to the 30 to get more clarity. Now on the 30 we see that the cloud is a lot more flat. It's barely in an uptrend. So our originally bullish bias just got a little weaker. And if we drop down to the 15, we'll probably see a similar story, which is that the cloud is flattening out. So all of our 3 higher time frames are telling us that our bias should either be neutral or slightly bullish. We can't really have a strong bullish bias in this case because some of the clouds are weak. We're open to both possibilities, either a break to the upper supply level or a break to the lower demand level. And similar to Monday, we can just set our alerts toward the end of both levels and wait until either one gets hit. Now our lower alert got hit. We see that the cloud, which was previously flat, is now starting to slope downward. There is no strong bullish bias here, so there isn't really a reason to avoid this trade or reconsider it. Momentum, market structure, and the cloud are leaning toward one side, so we can go ahead and enter short. We place our stop above market structure and target the next demand level. Then we simply wait for one of them to hit. And here we see that the price broke to the lower demand level and hit our target. That's our one win for the day. Now we can stop trading and move on to Wednesday. On the 1 hour, we already see that we have a slightly cleaner situation than the past 2 days. The price has been making consistent lower lows and lower highs, and the price has been following along with it. The 1 hour is giving us a bearish bias. Let's zoom into the 30 now to get a clearer look. And the 30 is even more clear, with the bearish cloud being even more developed. The cloud is clearly sloping down and has a thick blanket of resistance over the price. Let's check the 15 out as well. And the 15 is more of the same, which is a clear bearish bias. We see the cloud sloping down with a thick blanket of resistance. Compare this to yesterday, where we had a very flat 15 and 30-minute cloud. This gives us a lot more clarity in the direction we want to trade. So we set our alerts at both the upper and lower level, but our bias is bearish, so we're looking for the lower level to break and move lower. If it moves to the upper level, we'll be hesitant to enter along because of the overall structure. We either won't enter, or we'll need something exceptional to happen that shifts our bias. Now our alerts are set, and we simply wait for one of them to hit. Here we see a very strong drop at the open, which is in line with bearish momentum. We could enter short here, place our stop above market structure or just near the cloud, and place our target at the next demand level. Then we wait. And we didn't have to wait long because the price hit that level almost instantly. And if you missed this trade, since the trend was strong already, we had another opportunity for a breakout trade. But once we've secured our one win for the day, we can move on to Thursday. And by the way, if you're watching this and thinking, okay, this makes sense, but I want help actually applying it to my own trading, that's exactly what we do inside the LCE Accelerator. You'll get direct access to me through weekly group calls and a private one-on-one chat, so you can ask questions and get feedback on your trades anytime. You'll also get this exact level-to-level chart, and you'll be part of a private community of traders in a live trading room. If you're interested, the link is below. Now, starting with the 1 hour, we see that the market was recently bearish and is now beginning to flip bullish. It's still too early to call anything with this layout, so our bias should be neutral for now, and we should pay attention to how the price unfolds. It's also a little far from the price, which makes our bias even more uncertain and tells us we'll need more structure before deciding where the market will go. If we check the 15 and the 30, we see that the cloud is a little more developed here toward the bullish side. So really, our bias should be bullish, with the only issue being the lack of development on the 1 hour. This is the market basically telling us to be patient and wait before jumping in. We're betting on the price breaking into this level and moving higher. We can also set our alert at the lower level, and it still has a possibility of happening because of the stretched position of the 1 hour cloud, but we're still cautious. Now we simply wait. And what happened here is that the upper level didn't hit. The price slowed down and eventually reversed. We didn't get a breakout, and we didn't even get a notification of our alert getting hit, so we wouldn't have even opened our chart. No trade today. Now let's move on to Friday. On the 1 hour, the cloud was bullish before, but it's now starting to flatten and turn over. That means we don't have a strong bias on the 1 hour, and the price can go either way. We see that reflected in market structure as well. We don't have an uptrend structure or a downtrend structure because we have no new highs and lows being made. The market is tightening into a range, so either side has a possibility of breaking out. If we zoom into the 30, we have a similar story. The cloud is flat and price has no clear direction. We can expect the same thing on the 15th. So let's go down to the 5-minute and set our alerts. Since the price is in a range, we want to set our alerts deep enough into the level where we don't get caught in any potential reversals. Once our alerts are set, we simply wait. And here we see that the price has triggered our lower alert. Now, based on our neutral bias, there's not really a reason for why the price would reverse here. There isn't any major cloud support to repel the price. Therefore, we can expect this momentum to continue and drop to the lower level. So we enter short with our stop above market structure as usual and our target at the next demand level. Now let's see what happens. The price quickly dropped and hit our target. Very simple. And that's our one winning trade for the day, so we can end the week here. That's how you trade a week like this with the LCE model. Now, if you want to start trading this way, be sure to check out the link below to join the LCE Accelerator. And if this video helped you, let me know by leaving a like and subscribing. And I'll drop more videos like this. I'll see you in the next one.